Hi everyone, welcome to Scientific Investing. And I keep getting a lot of queries, and one query which I keep getting these days is regarding the IT sector, IT index underperformance, and when companies like TCS, Infosys, the whole IT index will run up, and why IT sector is underperforming. So I will talk about it in detail. And before the standard disclaimers, I'm a SEBI registered research analyst. I do hold some of the stocks I'll be discussing. So please take this video from education purposes. Now, I am a firm believer of data-driven analysis, and those of you who have tracked me for long enough, you will realize. And even to give a point of view on why the IT sector is underperforming, I will try to, do a little bit of data analysis and explain you certain things which I think is never discussed in any research report. At least I have not seen being discussed in any kind of research report or something. So let us start. So first thing, you must remember this. Globally, the global IT spend is almost a $3,000 billion market. And out of that, the ITS, it is divided into four parts: ITS, BPM, software products, or ER&D. So typically where the big Indian IT services company work, they work in the ITS and BPM, which is the IT services and business process management. And what do you see in the ER&D side, though ER&D size wise, it's very, very big. Bulk of the ER&D still stays with the customers. They don't outsource. So major outsourcing which happens, it happens in the ITS and BPM side. And this global IT spend is typically it grows at 4-5%. And this year, 2018-19, you can see it has grown at almost 5.6%. So remember this, that almost $1,000 billion is the global IT spent on IT services and business process management. Now, just to give an example how this outsourcing concept works. So on the BPM side, if I take example just of a BPM, the global spending on the BPM is almost $200 billion. And this is growing at 4.5%. Some of the data I will see it's little here and there because I have tried to pick data from different years based on what reports are available. The idea is not to have the exact growth rate, but the idea is to understand how the industry works and what is the tentative growth rate. So the global BPM spend is around $200 billion. And out of that, almost $80 billion is getting outsourced, which is almost, 40-45% is getting outsourced. And this is growing at 7% because the outsourcing growth rate is higher. Then the Indian share of the BPM outsourcing is almost 38% of this 80 billion, which comes around 35 billion. So 35 billion becomes the Indian market for business process management, which the TCS, Infosys, and the WIPROs of the world, India, are doing. So this is how the value chain works. So if you start from the top, this is how business flows to Indian IT services company. Why I am highlighting is because I will tell you where is the pain point and why the pain point is flowing. Okay. So this part is clear. Now let's look at the next data point. This is a very, very interesting data point, and I have not seen any report highlighting this. What I have done here is I have taken the global IT spend since 2005. So this table contains almost 19 years of global IT spend in terms of billion dollars. And also I have taken one more indicator, which I'm calling it the other indicator. I will talk more about it later on. So first two rows are global IT spend and the other indicator, how the value has changed. And then what has been the year-over-year growth rate of this other indicator and the global IT spend. So if you see there is a wide fluctuation. If you see 2007-8, both IT and the other indicator grew at almost 11% and then 7%. And next year, both were negative. And then again, bounce back, again negative. 2015, they went through their worst, where both numbers were down almost at -4, -5%. What is interesting is if you look at 2021, which was one of the best years for the IT sector, and that is where at the end it topped. The IT sector global IT spend growth rate was almost 13.7%, which was highest in the history of last 20 years. And the next year was pretty bad. The other interesting thing is if you see this graph, the graph highlights there is a strong correlation between the growth rate of global IT spending and this other indicator, which means if the other indicator is growing year over year, the IT spend is also growing. If that is not growing, the IT spend is also not growing. And imagine if the IT spend will not grow, then lesser outsourcing will happen. If lesser outsourcing will happen, the outsourcing growth rate will not be there. And if outsourcing growth rate will not be there, the big IT companies, which take almost 38 to 40% pie of the global IT outsourcing spending, they will also not grow in a right manner. So the question is, what is this other indicator all about? Any guesses? Type in the comment section. So this other indicator is basically the global GDP growth rate. Now, how it plays, if the global GDP does well, and this is my assumption, my hypothesis, if the global GDP does well, companies do well, companies make profit. When companies make profit, they have more money to invest, they have more money to spend. When they have more money to spend, their budgets are high. When their budgets are high, their IT spending is high. When the IT spending is high, the outsourcing is high. When the outsourcing is high, the companies taking the IT outsourcing businesses, they grow at higher rate. The other thing is, if you look at the mean growth, the global mean GDP growth rate has been around 4.7%, and the global mean IT spending growth rate has been around 3.5%. What we saw in COVID in 2021, that was an outlier year, not in a decade, but maybe in a century, where 5 years of digital growth was pushed in 1 year. And that is why you saw almost a 13.7% global IT spending growth rate against a mean of 3.5, which is almost a 4 times more. So reversion to mean has to come. Look what has happened in 2007. You went through 11.2% growth rate in 7, and then you had a negative year. So things cannot grow exponentially with that rate, and this is how things work. Reversion to mean is a very, very important concept which all of us have to understand. So what happened in 21, first you had this kind of 14% of global IT spending growth rate. Then nobody was traveling, the offices were not open, so the companies which used to work on 20% margin, they started working on 25% margin. And that the companies which should be valued at 20x, at peak profit, peak growth rate, peak margin, they got a peak valuation of 45x, 68, 70x. So again, those of you who track me, there were n number of times I cautioned at the end of 2021-22 about IT sector highlighting these things, but that is how it has played out. So now the situation is basically, if you see global IT spending, I think 4% is a decent number we should expect. Now the question is, it's a up and down cycle, and everybody is talking about recession in US, recession in Europe and all. And if you go and read the con calls, you'll see the decision making is very, very slow. So if I can show you even some of the latest con calls of Q1, there are companies which are telling the growth was slower than they expected. They are telling that they didn't grow, the employee headcount has gone down. And services business, you can directly measure the company's growth by employee headcount growth. That is going down. If we take some manpower hiring companies, they are telling that the IT hiring has stopped, and in fact they are not even filling the positions of which are being vacant. And even some of the better companies in IT which have shown double-digit growth rate, they are also telling that the decision-making process has become very, very slow. Instead of 2 signatures, 4 signatures required, because the whole world is in cost-cutting mode and everybody is trying to be cost efficient. That is what happens when you go through a kind of I won't call recession, but recession-like scenario which is happening with the US and Europe. Now the question is how long it will happen. So let me give you another data point. If you have tracked IT industry, you will know Gartner is one of the biggest voice in terms of IT consulting and what is happening in the IT industry. And I have seen repeatedly Gartner forecasts itself going wrong, and especially at turning points of highs and lows. So this is an example from 2013 where Gartner predicted the IT spending to grow at 4.2%, but the growth ended up being 0.4%. So it's very, very difficult to make any kind of prediction and all. As an investor, I think the best way we should do is we should buy when there is a lot of pessimism, whether we do SIP or whatever, that's a personal choice. But that is when we have to, we have to invest. And when there is a euphoria of peak margin, peak revenue rate, peak valuation, that is the time we have to be cautious and book our profits. And exactly that is what I was trying to highlight. I have just mentioned some of my tweets, but the behavior I saw was very, very reverse. And we should know that when things change, when there is a pessimism, when there is optimism, and the numbers, if we look at the numbers say, when did you have 13% kind of growth rate in global IT spending? That was saying. So the question is now, one more point I want to highlight: is IT sector really underperforming? So before that, let me highlight one more point. So when you saw the global IT spending has been around 3.5% mean value, the mean growth rate of big Indian IT services company, which represent the IT index, because basically these 4 5 companies represent bulk of the IT index, what you see in ITBees, they have grown around 11 12%. So basically the Indian IT services, so first, your global spending is 3.5%. The outsourcing is growing at a higher rate than that, around 6 7%. And the Indian IT services companies are growing around 10 11%. So you can say the Indian IT services company grow at 3x than the global IT spending. And you can see the global IT spending and global GDP growth rate, they are kind of connected. So that will give you a hint, why the companies are giving you a 4 to 6% kind of growth rate. Because the global IT spending itself might be, my gut feel is that based on the historic data, it might be growing at 2%, that kind of number. So this is how we have to track. So what is the range how IT companies can grow. So don't have an option of expectations. Go by data. Don't expect these companies to grow again at 12% beyond what happened in 2021. That happens once in 10 15 years. It might happen again after 8 9 years. If it happens in next 2 years, I'll be surprised if it happens so frequently. But this is how you have to set your expectations. What I see is people feel everything which will go down, it will reverse and it will go up. It doesn't happen that way. And not even IT sector. There are many more other sectors where I have seen this kind of behavior. But you have to keep your expectations very reasonable. You have to also look at the valuations. Even after this correction, where are the valuations? Historically, how has been valuation? Have things changed? So this is how you have to set expectation for broader IT index. But I will come back to the question, that is IT sector really underperforming? Now the thing is, the way IT index or ITBees has been built, it's mostly dependent on TCS, Infosys, HCL, WIPRO, and few more companies. And predominantly these companies are services company, but IT sector is not only about services. And actually there are few differentiated businesses available. If you see the IT landscape, this is how IT is, where you have services, you have BPM, you have software, you have hardware, you have e-commerce, you have technology, and ER&D is a specific part in services. So the actual IT sector is a combination of all of this, but because of the size of services, what we see in IT index is only those specific areas. And there are a lot of segments which are much differentiated, much better growth rate, much stronger business quality, and they are growing at a much higher rate than services company. Actually, 3 4 months back, we did a super session on IT, and actually the super session itself ran for almost 2 months, where we covered almost 15 20 plus company, 5 plus segments of IT in a detailed 13-hour session spread across 3 4 different sessions. So if you really want to understand everything in detail, then my suggestion would be go for that. Again, don't go just because you want to buy something. A lot of things have gone up. These are not the prices at which I will be interested to buy. But if you want to understand the business model and the difference, so that you're better prepared when there is a valuation attractiveness, you go through it. So India does have few good software companies. In fact, on YouTube, I made a video on leadership where I spoke about the CEO of RateGain, which was a IPO which came 2 years back. And RateGain is kind of a software product kind of business. So I did deep dive into some of these aspects. But in India, you have companies like RateGain, companies like Newgen, companies like Intellect, which are not typical services company. Or in ER&D space, you have companies like Tata Elxsi, KPIT, these kind of companies. The question is regarding the valuation. And even 3 months back, few things were available at a fair value, but right now I don't see that kind of margin of safety. But these are some of differentiated business where one should study without feeling about IT sector is all about these 3 4 companies. And still there are few interesting companies. I would suggest you to go and study companies like MPS, go and study companies like Just Dial, where some business model change is happening, some good things are happening. Try to explore it, see where still, still there is not very much froth in the valuation. We have launched a very, very interesting data as insights product for retail investors and traders, which is called Simba, Scientific Investing Market Breadth Analysis. The link to subscribe to Simba is given below in the comment section. Do subscribe to that. First month access is free. Go through the whole website where Simba provides you a lot of insights about how to look at market, how to generate ideas, how to identify good sectors, good trades, bad trades. So do explore and do register for Simba. But I hope this video explains why the IT sector is underperforming, why the IT sector, really did well 2 years back, what to expect in terms of how it should pan out in coming months or years, and how you should look at IT sector beyond the IT services company. I will see you with another video. If you like our work, do subscribe, do share with your friends so that we can reach out to more and more people. And I will see you soon. Thank you.